Hey there, future African millionaires. Did you know that less than 10% of workers in sub-Saharan Africa save for old age, the lowest rate for any region in the world? That implies most of the breadwinners like you and I today won't be able to afford basic items after retirement. That'll subject our children and their children to what we call black tax. You probably clicked this video because you're tired of the financial rat race and you're sick of watching your bank account barely keep pace with the rising cost of living. If you're lucky, perhaps, you've tried your hand at the stock market only to find yourself on a wild roller coaster ride you can't seem to get off, losing money, getting in and out of stock positions based on hype, all the while looking like an amateur doing this. I'm here to tell you there's a better way. Today I'm pulling back the curtain on a powerful investment strategy that's been quietly building wealth for savvy investors for years. It's time to discover the magic of ETFs. Let's be honest. Traditional investing can be a real drag. Exorbitant fees chip away at your returns, leaving you with less than you deserve. And let's not even talk about the complexity. It's enough to make anyone's head spin. Wouldn't it be great if there was a way to invest that was not only simple, but also incredibly cost effective? A way to build a rock solid, diversified portfolio without needing a degree in finance or working on Wall Street? Well, my friends, there is, and it's called ETFs. These are exchange traded funds. Imagine ETFs as a carefully curated basket of stocks, all bundled together into one convenient package. Here's how it works. When you buy shares of an ETF, you instantly own a slice of all the assets inside. It's like having a team of seasoned investment professionals working tirelessly on your behalf, handpicking the best opportunities, and continuously adjusting the mix to ensure you're always positioned for maximum growth. Now, let's talk about the real game changer: fees. ETFs are renowned for their incredibly low expense ratios. We're talking fees as low as 0.03% per year. That's right, a tiny fraction of what you'd pay for traditional mutual funds or money market funds, which can easily charge you 1% or even 2% annually. As of September 2024 in Kenya, for example, expense fees are as high as 3% inclusive of VAT. Think about how much of your hard-earned money is being siphoned away by those unnecessary fees. Let's break it down with some real numbers. Suppose you invest $10,000 in a money market fund with a 2% expense ratio. That means you're losing a whopping $200 every single year just to have your money managed. Now compare that with an ETF, charging a mere 0.03%. With an ETF, that same $10,000 investment would only cost you a paltry $3 per year. That's an extra $197 staying right where it belongs, in your pocket, working for you. Let's look at this practically. So let's take a look at two examples here. I have Jubilee Asset Management, which offers a money market fund in Kenya. Let's just go ahead and look at their expense ratios for this service. So we have management fees of 2% annually, exclusive of VAT. But if you look at the TER, total expense ratio here, we can see it's 2.7% inclusive of VAT. So let's go ahead and use that in our mutual fund calculator here, which will basically go ahead and calculate this for us. So $10,000, that's what we're looking to invest. We plan possibly to add $1,000 every month. So in a year that we'll be adding $12,000. And let's work with a very long horizon. Let's work with 30 years. The rate of return, if we just hop back in here, we can be able to see how much this was able to return in terms of inception, since inception. So 21.2%, but this is on Kenya shillings. So we'll just go ahead and work with that and keep it constant. So 21.2%. Of course, this is not net of inflation. So if we, of course, include inflation, that's a different story altogether. But the fund expense ratio we've seen is at 2.7%. So pretty high. So if we go ahead and hit calculate, we can see if we leave it to compound, it's quite a significant amount of money. Ending value gross is $25 million. That is enough to be able to just go ahead and retire on if you do this consistently. However, basically almost half is being consumed by the fees, which stand at $11 million and 19,000. So significant amount. So if you go ahead and compare this with something like Vanguard S&P 500 ETF, which I'll just hop onto right now, it has an expense ratio of 0.03%. However, the performance isn't as great, but if you look at the fees over time, of course, it's amazing. You can be able to actually see a huge difference. If you look at the 5-year performance of the Vanguard S&P 500 ETF, it's at 15.87%. But since we use since inception, let's work with 14.62. So we'll hop back on here, change this to 14.62. and then make the expense ratio accurately represent 0.03, which is the expense ratio for VU. So we go ahead and hit calculate. So the amount goes a bit lower, but if you look at the cost of fees, very, very low compared to what you have on a money market fund. So you're basically losing only $38,000 as compared to $11 million on the previous example with a high return of 21%. So as you've just seen, over time, the impact of these seemingly insignificant fees becomes truly staggering. Studies have consistently shown that low-cost ETFs outperform their high-fee counterparts over the long term, as you've seen. So why on earth would you pay more for the same or even inferior performance? But wait, there's more. ETFs aren't just about saving on fees. They're also a very fantastic way to build a diversified portfolio with ease. With just one ETF, you can instantly spread your investments across hundreds or even thousands of different stocks and bonds. It's like having a safety net for your investments. If one company or sector stumbles, your entire portfolio isn't jeopardized. So here I brought up a list of ETFs that are actually provided by Vanguard. So let's just look at one here. Let's look at VIG, which is a dividend appreciation ETF, which covers the basic asset classes of stocks, but basically large cap blend. So this means across all sectors, but all these companies must have a large market cap. So if you look at the expense ratio, that's at 0.6. The risk is at 4, which means, of course, you can be able to enjoy significant returns on this. If you look at the performance over 10 years, it's 11.85, and 5 years is 12.72. Since inception, it's 9.91. The minimum investment is $1, so a single dollar, but the price is 193. So if you want to buy a single unit, or we can call a stock unit, is going to cost you 193, and the price has been up 52 cents as of 10th of September 2024, which is basically yesterday. So let's go ahead and just take a look at this. So here we can see some basic information. YTD returns 14.25, net asset value, which is 14.34. So you're able to just get a relative view of in terms of performance and expenses for this ETF. Once again, because it's a dividend appreciation, the ETF only puts money in companies that bring back a dividend, and they have to be large market cap stocks. So that's just one example. If you just scroll through this page, whenever you have some time, you can just go ahead and Google Vanguard ETFs, and you can be able to have a list of all these. So you have a variety to pick from. We have 86 pages. Of course, we're not going to be able to cover that on this video, but just to give you an idea of the vastness from this just one single provider of ETFs, just how many options you have to just go ahead and get started on your journey. So ladies and gentlemen, you've been able to see the cherry on top of the pie. ETFs are incredibly low maintenance. Once you've made your investment, you can essentially sit back and relax. No need to obsess over market fluctuations or stress about timing your trades perfectly. Simply let the power of compounding do this thing and watch your wealth steadily grow over time. Now, I know it sounds almost too good to be true, but this is something that I actually practice myself. I actually own a couple of ETFs. And I assure you, ETFs are the real deal. They're the hidden gem that's been quietly enriching savvy investors for years. And now it's your turn to unlock your potential. If you're looking for more information on ETFs, check out my Patreon channel. Link is in the description below. This is where I talk about my investments and reveal my stock and ETF portfolio and offer advice and recommendations for which stocks and ETFs you can look to add into your portfolio. So what are you waiting for? Don't let another precious moment slip away while your money languishes in a low yield savings account or an expensive mutual fund or money market fund. Take charge of your financial destiny and start investing in ETFs today. Your future self will be eternally grateful. Thanks for joining me on this journey to financial freedom for Africans. Remember, the best time to invest was yesterday. The second best time is right now. If you like this kind of content, don't forget to subscribe and click on the bell icon to turn on notifications. And if this video was of value to you, leave a comment and give a thumbs up if you liked it. Till next time.